Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, this is portfolio update number 194. Since it's Monday, this is a buy video. And what I've done is I deposited $100 into my taxable M1 Finance brokerage account. I've named it Average Joe Dividends. And I've had this account open since, let's go to the all-time here, 2017. You can see I really started investing in it right around here. I started kicking up in 2019, and I really started putting in some big money in 2022. And then I've been consistently adding to it every single week. And we can see here over the last year, we've had a money-weighted return of just over 10%. So for me, that's outstanding. That is pretty much the average of like the S&P 500. Of course, you don't get 10% every single year. Sometimes the market's up, sometimes it's down. You could have multiple years of the market being negative. But what my strategy is I am buying every single week, no matter what the stock market is doing. People call it DCA or dollar cost averaging. So I'm dollar cost averaging into this account to just make it bigger and bigger. And of course, my dividends just keep on growing more and more as I buy fractional shares or whole shares of dividend paying stocks. So if you're curious to see what's in this portfolio, I'll leave a link below. And I have it divided into 3 different slices: the ETFs, the dividend portfolio, which has most of the companies in there, and then I added 10 more dividend companies not too long ago. But one of these days I'm going to consolidate these and just have the individual positions so I don't have to worry about underweighted slices, because all of the new monies I put in, like I did today, it's going to go to the underweighted portion of the portfolio, which right now is the dividend portfolio portion of this dividend portfolio. So until it catches up, I think it's going to catch up pretty soon, because we're going to get some big time dividends from SCHD. And then at the end of every month, I get a BST dividend, which is over $500 every single month from BST. So these two I have set up to go into the portfolio itself. The other dividends I receive, they will go back into the stock from which it was paid from. So what we're going to do is, like I said, I deposited $100 into the account, and we can see here's the deposit right here. I did it actually last night, and then there's the $100 you can see. And there's a couple of dividend drips we're going to see in here too as well with Avista and O. So these dividends showed up Saturday morning. There's a 1-day delay at M1. So technically these dividends paid on Friday, but they showed up into my account Saturday morning. So these will be applied, and it's going to be dripped back into O Realty and Avista. So that's what those 2 buys are going to be. We're going to see their next dividends go up as a result. So let's go into the 5 buys. We're going to click on each of these. We're going to see the fractional shares that were bought. So with the $100 deposit, this was underweighted Kimberly-Clark in the dividend portfolio slice. So these were not my selections. I'm using Auto Invest. Every Monday I use Auto Invest to auto select the stocks. On my Wednesday, sometimes Thursday buy video, I deposit another $100. And what I do is I pick 5 different stocks and I put $20 into each of those. So you want to subscribe to the channel, and so you don't miss that video. And the best way to support this channel is just click the like button. I'm not asking for any donations. Just please subscribe, like. That's all I ask of you guys. And thanks for you guys for watching this video. You could be anywhere else doing anything else. So I really appreciate you guys watching. So first up, Kimberly-Clark, $32 of the $100 went there, and it bought nearly a quarter share. It bought 0.24324 of a share of Kimberly-Clark. And again, we're going to see what the next dividends are going to be for each of these, and they're all going to go up. We're going to see a change in the monthly, quarterly, and annual dividends as well. So this is a dividend drip right here. So I received that $28.57, and then that bought over 3/4 of a share of a Vista, so 0.75984 of a share of a Vista. And then next up, Aflac. We have a small portion. The 829 is going to buy 0.08072 of a share of Aflac, so about 8% of a share of Aflac. But I'll show you though, even these tiny buys will move the needle for the next dividend. And most of the money went into Costco, and Costco pays about 0.5% of a dividend yield. So we're not going to see the dividends go up much for Costco, but Costco has been a really good grower. I've doubled my money with my Costco investment. And never forget too that Costco every 2-3 years does a special dividend. So when you count the special dividend in there, I'll have to do a calculation. It's at least 2% for Costco, I would imagine, for their actual dividend when you count their special dividend in there. So slowly chipping away, adding a little bit more of Costco here. Bought 0.06058 of a share of Costco, and Costco is always expensive. You look at the PE ratio of Costco, it is just outrageously high, but it's always been that way. But I've never been sorry buying Costco. It's always just, it's gone up for me at least. So it's, like I said, it's never cheap to buy Costco. And then last but not least is Realty Income. This is a dividend drip, so almost a quarter share of O, buying 0.23926 of a share of Realty Income. We're going to go to the holdings tab, so we're going to come back here in just a minute. Like I said, there's 50 positions in this portfolio, and you can see like the cost basis here and the unrealized gain. If I were to sell, here's the value. But we're going to go to a Google Docs spreadsheet where I track all these positions. I also track my net worth as well, so other investments, and we'll get into that at the end of the video. So we'll go here, and like I said, this sheet on this tab, the dividend portfolio, tracks everything that's over there at M1. I'll leave a link below to this so you can kind of see it too. You can see how many shares I own of all these companies, and you're welcome to modify the sheet yourself if you want to use it. If you have a lot of individual positions, you can see the logic I'm using to track this. Of course, you have to put in your own stocks if they differ. Like for example, in the company column, that's hard-coded with Fifth Third. Same with the ticker symbol, but the share price uses a Google Finance function, and it's pulling that share price by looking up FitB, which is Fifth Third, and returning that share price. And my average share price is using a VLOOKUP on the M1 data tab, and we're going to import some data into this tab where it aligns the shares, the cost basis, and average share price for each of my positions. And we're going to pull it from here. We're going to dump this data into that sheet, so I don't have to type in my new number of shares with the positions where I bought more fractional shares, as well as the average share price and the cost basis for each of those. It's going to be automatic copy and paste. So I'm not trying to pat myself in the back too much, but I'm kind of proud of myself a little bit of coming up with that. And so I don't have to type in those numbers anymore. I don't have to use an app or pay for a service at all. It just automatically pulls it, and I don't have to put in like my credentials that over at M1 and risk, security, things like that, of exposing myself there. I can just copy and paste it into my own sheet. So we can see the average share price went over that. Shares, as well as using that VLOOKUP. Here's the current value if I were to sell, for example, Fifth Third. And then here's my cost basis. Here's the gain or loss, including dividends. Here's that gain or loss expressed in a percentage. Anything 25% or above will be in green, and anything, of course, that is below 0% will be in the red there, like Hershey's. But thankfully, I only have a few positions that are in the red, but I believe in them long term, and I'll keep on adding to Hershey's, Pepsi, and HP. Here is the quarterly dividend. This is something I pull it up myself. I manually, what I do is, like for Fifth Third, let's take a look and see. We'll go to, I like to use dividendinvestor.com, and we'll look up Fifth Third, and we'll see if they've announced their new dividend. What I do is I sort this by the pay date. So anything on top, I'll start looking at Fifth Third and Oracle and see if they've announced a new pay date. So let's go and type in Fifth Third. And we don't have a new dividend date there. We'll check Oracle. But what I do is, like, every week or so, I'll check like the top 5 and just spend a couple minutes on it. We do have a new dividend date for Oracle, so let's update that. I like to add 1 day because, again, M1 has a 1 day delay, so I want to know the exact date really this is going to hit my portfolio. The only exception I do is that the last day of the month, if it had been July 31st, I would just keep it July 31st. That's the only exception I do. So, because it's mainly because of BST pays it, usually it's the last day of the month, and I don't want it to pay the first. I just want it in the last for some reason. That's just the way I've been doing it. So we're going to change it to 7/25/25 for Oracle, and we will reshuffle the deck on Oracle, and we can see what the next dividend is going to be. And what I do is then I sort it A to Z, and Oracle's going to disappear. It's going to go into the Julys, and boom, there it is right there. So it's in the July pair. So I'm just waiting for really one of these to report. Fifth Third, we know what the dividend is going to be. It's not going to go up because Fifth Third they usually don't increase their dividend till September. So likely that's going to be the next dividend, unless I buy more fractional shares before their ex-dividend date. But we have most of the July pairs. But of course, are going to have to, once all my June pairs are paid, I do is I'll update O and BST to their monthly pairs, to their July date, and then I'll have those locked down. But I don't exactly know what I'm going to get paid for dividends quite yet, because sometimes I buy after the ex-dividend dates, or I may buy some more JP Morgan before its ex-dividend date, so the 1008 may go up. So I don't really know exactly. It's going to be at least this, but it's going to usually go up a little bit as I buy more. So let's, I've hard-coded in the Costco, the current dividend. We're going to see it change, though, the next dividend. So I put it here to show you guys just, how that's going to change. And then Aflac's already paid its dividend, the $12.46, so I've written that down. But $12.39 is what it paid. So you can see I bought, this is a drip. So the drip was made at $12.46 on the 3rd. And then, let's see where they're at. $14.18 is the current. Looks like I bought some fractional shares after the ex-dividend date with O. And there's a drip in there too. So we're going to see that $14.18 go up. And then a Vista, that's a dividend drip, the $28.94. We're going to see that these two go up as well. So Costco, Vista, and Kimberly Clark. I think I've got them all. So $13.85, that's going to go up as well. We're also going to see the monthly cash flow, quarterly and annual, those go up as well. So I'll put these over here to show you how they're going to change here. Then we're going to update the new monthly cash flow average. We're going to put that over here on this line. And then tomorrow, maybe we'll put in the line. So tomorrow I'm going to wake up in the morning. I'm going to get these two dividends. We'll maybe look these up. Perhaps let's just look these up right now. So tomorrow, I just want to make sure I didn't buy any fractional shares after the ex-dividend date. We'll see what McDonald's is going to be. So we're going to go to the portfolio, and I'll show you how I look up the next dividend if we're well past the ex-dividend date. We'll look up McDonald's. We'll go to the 1 month view. This is going to show the cumulative of the year otherwise. Dividends earned $14.21. So we can put that in there, $14.21. Then what I do is I track all the dividends. So we'll put plus $14.21. So we can see historical of like McDonald's. My first dividend from McDonald's was 12 cents. You got to start somewhere. And if you're new to this and you've been just, buying fractional shares of, say, McDonald's, you're going to have a similar start. Unless you put in, thousands of dollars, you're going to have a slow gain here like I've had. And now I'm up to, over $14, which is more significant. I can almost buy a Big Mac value meal every quarter with McDonald's with this dividend. But I like to just illustrate, coming from 12 cents, I first started doing this. So that's the reason I track that. And there we go. Fix that. And then next one, we'll look up Hershey's, which has been struggling. We're getting closer to breaking even with Hershey's. We'll look up that next dividend as well. And then we're going to update the sheet finally. And we'll see what the next new dividends are going to be. Here's Hershey's, and we'll do the same thing where we can kind of look ahead, peek ahead into the future. Sometimes you have to go to the 3-month view. I'm at the 1-month view, and I'll go to the 3-month view and 1422. And put that in there. I wish, not $140, 1422. And then we'll add, you can see the difference now, the change from 1278 bumping up to 1422 now. So that's a good change in dividends. And the same thing with the Hershey's. I started from a little bit higher, $1.87. Looks like I wasn't dripping dividends there with Hershey's. They were going somewhere else within the portfolio until I changed my strategy to drip them in, and we've just been increasing ever since. It looks like, well, I've missed one. So we have Duke Energy. Let's put that one in there too. We'll look up Duke. So it's nice. You wake up in the morning and you just have these dividends. So it's a great feeling, and you guys know it if you own dividend stocks. If you're new to owning dividend stocks, well, you'll get that feeling too once you start buying these stocks. And there it is. Duke, we'll see. We'll try the 1-month view first. Nope, I should have left it there. Looks like it was already set up at 3 months. So dividend will be 1509. So I didn't buy any fractional shares there. We'll put that plus 1509. So a smaller gain for Duke. And so tomorrow, what I'll do is these will all drip. So there'll be 3 buys: McDonald's, Hershey's, and Duke, buying more and more of those. And guess what's going to happen? Their next dividend is just going to go up. And also the monthly, quarterly, and annual, it's just going to keep going up and up. So we'll put another line item for McDonald's, Hershey's, Duke over here. I'll show you how I do that. So that's the event there. McDonald's, Hershey's, Duke, dividend drip. This will be on the 25th. And the reason I track this is it's progress. Every little thing moves the needle, like $100 deposits. And today we'll see how much it moves the needle today. It's not going to be very much because Costco was the main buy, I believe. So we're going to go to the holdings tab and we'll see what the result is. But I guarantee we're gonna have higher dividends as a result. So we're gonna go to the M1 data tab. We're gonna paste this in, paste special, and it just goes into the A column and it lines up the shares, cost basis, and average for each of the positions, does a VLOOKUP, and returns the values there. So look at Costco, moving from 378 to 386, getting close to that $4 mark, which isn't much, but I'll show you an example of like the special dividend. The last special dividend that I received from Costco, and this was, I own less shares, it was $35.69, and the time before that was $13.18. So the way Costco has been trending, I'll bet you I'll get something in the 40s, maybe even touching 50 when I get the next special dividend from Costco. We'll see. So moving up to 386. Let's look at the dividend drips we got. And the first one with Avista, that amount, it was at $28.94 before. $28.57 was what it paid before. Looks like I bought some fractional shares after the ex-dividend date. So we're going to be at $29.31, almost $30 for the next dividend for Avista. Oh, and I wrote that down from $14.18 actually. We received $13.87, but I bought some fractional shares after the ex-dividend date. So we're going to move up to $14.24 there. Tomorrow we're going to see these three move up as a result of those dividend drips. And they're going to move up pretty good, a nickel or so. But every time, there's a drip, there's a dividend increase. You can see I track those increases as well. And when I do these buys, it just ticks these up constantly. They're going up all the time. Look at this. Kimberly Clark moving from 1385 to 1416. Of course, these are small baby steps, but day after day, week after week, month after month, year after year, this just adds up. It just keeps going up and up. So let's look at the difference with the cash flow averages. The monthly moving up from 1,085.20. This is like a monthly paycheck. Now moving to 1,085.53. So what do we add? 33 cents or so with that. So not bad. And then quarterly moving up from 32.55.60 to 32.56.60. And then the annual moving from 13,022.40 to 13,026.41. We're going to take that new monthly, the 1,085.53. So 1,085.53. And we can see the event again. The Avista, the O dividend drip, plus the $100 deposit, added 33 cents of additional monthly income. Of course, it's pocket change. It literally is. But this is just one Monday. Remember, every Monday I'm doing this. And this adds up to real money. Just in the month of June, I've added now $3.62. So every month I'm getting $3.62 additionally. And it's every month going forward into perpetuity. And I'm not even close to being done with the month of June. Even though we're halfway through, I haven't had the heavy hitters come in, the SCHD or BST at all. Once those hit, it's going to go a lot higher than that. And we'll also see it go up as well if SCHD raises their next dividend for Q2. I'm betting it is. We'll see. And then tomorrow we'll have this event, the dividend drips, and it's just going to increase it even more. It's going to be like, I don't know, a dime, something like that. But hey, an extra dime every month just because of these dividend drips, I will take it. So we've covered that. Let's go to the dividend tracker tab, and I added in some more data to this. I actually looked back in M1 and ran some reports, and I went back to January 2019 where the portfolio value was $1,300, and here I just had, I think mostly as like ETFs. I think I just had like VTI or something like that, and of course in January it doesn't pay a dividend. Same with February, there was nothing there. And so this is when I was just, I think, investing in VTI and like BND and just having like a balanced portfolio. And I changed my mind and said, you know what? I have plenty of that in my 401k, my IRA. My IRAs, I have several of those, and we'll go into that in a bit. And so I thought, you know what? I want to do a dividend portfolio. And it was such a small amount anyway. And I did a shift. And you can see where the dividends were increasing, and I started adding to it as well. And you can see my deposits here too. And this illustrates too that even though right around here I deposited a ton of money, but overall from 2019 to present, it was, let's do an average of everything. And this is doable for a lot of people, right around $2,700 a month. I know that sounds like a lot, but to do $2,700 a month over this period and having nearly $300,000, to me that's pretty incredible, and having this kind of monthly dividend. But if you guys started even earlier, if you're in your 20s or fresh out of college and you went at this for 10 years, even doing $1,500, you're going to be way ahead of this, way ahead. And if you do it like 15, 20 years, you probably won't even have to do it that long to probably replace your current W-2 or just your current expenses for most of you. But I wish I would have started this earlier in my life. And of course, I still would have contributed to my 401k, at least to the employer match, and still had an IRA too as well. But here we are right now. We're in June, and these are the current dividends I've received. Let's go ahead and we'll update it with the dividends I'll receive tomorrow. So it'll be, by tomorrow, it'll be 242.38. So we'll put it in that 242.38. But look at some of the dividends that I haven't received. But there's one as a wild card. I don't know what I'm going to receive with SCHD. It could be higher, it could be lower than this because they have a variable dividend. That's why I have it in purple. The blue ones mean it's a monthly payer. The whites, those are quarterly payers. They pay me every 3 months, like clockwork. So all these ones in white, these will pay me, as well as SCHD. They'll pay again in September, just plus 3 months. So go over here and we can see here is the average monthly dividend to 1,085.53, and here's the monthly increase to 362 again. Remember, we added that up right over here. And you can see I did last month 979 and the month before that. So this is just a compounding. It just keeps adding. We were at right about $1,000 in November, and I have an additional about $85, $84 of monthly income. And that's average because you can see the way the dividends pay, it's lumpy. It's small dividend, large dividend. But then when you average these out, so let's do an average. It's going to be right about there, 1,026. You can see how that works. So I'm adding them all up and divided by 3, and that's where you get that average. And that's the average, the current average of current next dividend. And then on this, what I have to do is, since I have 2 monthly pairs, I have to add those in twice. That's what this table is here in the blue, BST and O. I have to get those totals because as I reshuffle the deck, it's hard to follow and get a total for those. So I have to just use an array VLOOKUP and find the BST, return its value, add it up with O, add it in 2 more times so I catch it, those monthly pairs paying 3 times, and then I divide it by 3 to get the monthly. So that's how that works right there. So we can see month over month gain in the dividend income, 0.33%. Annual dividends, 13,026. Here's the annual increase that I've increased it just in June alone. We've added $100 deposits, so we're up to $500. So you can see lately, after I kind of did that big money dump, we'll just take a look and see what I've added to it. I've added $32,000, but it's been to average really about $1,000 a month. But let's look at how much the portfolio has gone up, though, from $188 to about $100,000 with $32,000. So, about 70 grand in gains in this time. So that is just outstanding. This is, the heavy lifting's kind of been done, and now when the portfolio does go up, you can see how it goes up and how these dividends are just increasing. So at some point, I'm just going to stop. The deposits are going to stop, and I'm going to start pulling some of the dividends, for at least to pay the tax burden on it. I may pull back half the dividends, or maybe 25%. We'll see what I do when I start doing that on this portfolio, but we're not there yet. I'm still working my W-2, and this is not enough to pay for all of my expenses. Let's go to my total net worth, because this dividend portfolio, this is about 15% of my current net worth right over here, this portfolio. We'll get into the rest of it right over here on my total net worth. So over at Vanguard, I have IRAs. I have a traditional IRA. I have a small Roth. I also have a taxable brokerage account, and I'm invested in these boring Vanguard ETFs. They're low fee ETFs that just over time they kick ass. I can't describe it any other way. It does well. And right now the sum is at 489K, almost 490 there. You can see the sum. This is my current employer 401K. It's all in Fidelity S&P 500 index fund. It's a low cost index fund, just like the Vanguards. And then over at M1, I have another account, an IRA. You can see it's in boring stuff. Really, the only controversial thing would be BST, which is covered call options. It's more income generation, but for me though, it's done well. I'll show you BST has done better for me than SCHD has, and I'll prove it to you with my gains. Percent gain or loss with BST, 37% over 37. Look at that with STHD. It's nearly doubled what STHD has done for me. And look at the yield too, 3.87 currently for SCHD, and look at BST is over 8%. So I know some people don't like to invest in things like this, but it's done quite well for me. And I know there's probably other covered call options that have done better than BST, but for me, I like the companies that are in it, and I trust the philosophy with it. So it's done well for me. So, and then going on to, here's the taxable brokerage account right here, the 287 that we went into right here. There's a little bit of a disconnect because M1, when it's pulling its stock prices, and when Google, there's a little bit of timing, but at the end of the day, at close, they match perfectly. So here's M1. Here's kind of like my money to deploy into this account over there, getting 4%. Here is I call it my 1-year emergency fund, but really, it's probably more of a 2-year, because if something happened, what I could do is I could just start withdrawing all of the dividends from this portfolio as well as all the dividends over here. And I would not be, probably just be maybe $2,000, a month additional I'd probably need from the cash. So that would last me a lot longer than a year. So over here, Capital One, this is my 2-month buffer of expenses. That's a little bit higher. I usually don't like to have more than 10,000. So, but I have to pay my mortgage here in a little bit, and also my credit card balances, which are below here. But here's my home value. Here's my liabilities, and here's what I owe on my house. But total net worth, subtracting out the liabilities, I'm almost at all-time highs again. And again, this is after purchasing a car too and paying cash. So we're close to where we were. What was it, November? So 1,827,000 was the high point, and we're so close. We're 14 grand away ish. With that at 1,813,000. So almost done a full recovery. But who knows though? Tomorrow we could, the stock market could fall on its face and go way down. Just don't know. I can't control it. The only thing I can control is buying more fractional shares or shares of stocks and increasing my my dividend income. And that's one of the reasons I created this portfolio, was to take some of the uncertainty out of it. When I need money to live off of, you can see the cash flow that here, unless we have a complete catastrophic drop in our economy, something happens with these companies, Verizon can no longer pay their dividend. But I think if something like that happens and all these companies can't pay their dividend, I think the stock market's just going to be, it's going to go to zero at that point. So even if I was in index funds, no matter what, it'd become all worthless at that point. And these stocks are going to be going down at a lower rate than like growth stocks, because they have an income side to them. They have a cash flow to them. So they're going to be a little bit less impacted on that front. So here I have the breakdown: stocks, home equity, and cash. You can see my total cash here. It's I'm pretty heavy in cash, but I'm pretty conservative. I want to have a good cushion if something happens. And then here I have it divided between pre-tax, which I'm a 401k millionaire. You can see right there. And to me, I don't think this is hard to do. I am 52. And I didn't max out my 401k every single year or anything like that, not even close. But I've been in a professional job, like a career job, since about 1996. And, and I started my career, I was making about 26K. And I'm making right now very, very, very low 6 figures, just over really. I'm not a high earner. And this is my net worth. This is not split with a partner. A lot of times you'll hear on podcasts and things like that, people will get on there and say they're a millionaire, but it's with a partner, and you don't know what can happen with your marriage or whatever. I went through a divorce in 2022, so this is post-divorce net worth. So it was essentially cut right in half. So but I've done, quite well. And luckily, I was with a partner though who was very good with money as well. So we were both good. We were a great team in that aspect of, saving money and investing. We had the same philosophy. So hopefully you're with someone who has the same kind of money philosophy that you have. So that's all I had to show you guys for this video. Oh, one last thing I like to go over this too is the average monthly dividend. I calculate this and I changed it to the 12-month trailing dividend for all of the ETFs as well. So it changed the average monthly dividend. So it's up over 3,500 at 3,518. And this is significant because if I was 59 and a half, I am not yet. I could just take the dividends from all my investment, including interest and savings. This is what it would be average every single month. I know a lot of people could live, comfortably on that, assuming probably a paid off home. So I'm gonna, by that time, my house will be long paid for, and this will be nice to live off of over 3,500. Of course, by that time, an additional about 7 years plus for me. This is all going to go up as well, and we'll see where this dividend portfolio is at in 7 years as well, because we have seen where it has gone in about how long, in like 5.5 years, is that right? 6 years ish where this has gone. So 1, 2, 3, 4, 5, yeah, about 6 years we'll say, where it's gone from essentially zero to almost 300,000. We'll see where it's at in another 7 years and what kind of dividends this portfolio is paying. So thanks for sticking to the end of this video. If you got value from the video, please click the like button. Also subscribe so you do not miss future videos. So Auto Invest bought Kimberly-Clark, Aflac, and Costco. So thanks again, everyone. I hope everyone has a great